Now let's look at investment companies. The Investment Company Act of 1940 classifies investment companies in three general categories. There's the face amount certificate company, the FAC, the unit investment trust, the UIT, and management companies. Face amount certificate company, purchased on an installment basis at a discount. Now, an FAC will mature after a period of years for a face amount. So we buy at a discount. At maturity, the FAC will mature for an amount greater than the purchase price. That difference at maturity would be my earnings. So earnings are paid at maturity, but these earnings are taxed annually as imputed income. Another term for imputed income is phantom income. Now with the FAC, there is no manager, so there's no manager's fee. Unit investment trust has a fixed portfolio, no manager, no manager's fee, and no board of directors. A unit investment trust is organized as a trust. So who is responsible for controlling the trust? Not a board of directors, but a board of trustees. Board of trustees. Management companies. Now, there are two types of management companies. The first is the open-end management company, which is the mutual fund, and the next is the closed-end management company. Let's take a look at the difference between an opened-end and a closed-end company. Now, we have six different characteristics here, and we're going to compare open to close as it relates to these six different characteristics. The open company, the mutual fund, continuous primary offering of an unlimited number of shares. So when a client buys mutual fund shares, they're always buying new issue shares. How many shares can a mutual fund company issue? There's no limit as to the number of shares they might issue. Now, when an investor buys mutual fund shares, they're going to be buying full and fractional shares. What about a closed-end company? Well, a closed-end company is going to have a single offering of a fixed number of shares. A single offering of a fixed number of shares. So if I buy closed-end shares on the new offering, I'm buying into a group of a fixed number of shares, and I can only buy full shares. So here, the closed-end company is not continuously selling new shares. They sell new shares one time, and the number of shares they can sell is fixed. And again, they only sell, an investor can only buy full shares. Trading of shares. What if I buy mutual fund shares? I later decide I would like to sell these shares. I would like to get out of this investment. Would I take these shares to a secondary market, such as the exchange or the over-the-counter market, and find a buyer for the shares? No. Mutual fund shares are redeemed back to the fund company. Mutual fund shares do not trade on a secondary market. What if I had bought those closed-end shares from the closed-end company on the primary offering? I have decided I want to sell my shares. Would I sell my shares back to the issuing company, back to the closed-end company? I would not. Closed-end shares are not redeemable back to the issuer. I would have to take my closed-end shares to a secondary market, such as an exchange, like the New York or the American Stock Exchange, or the over-the-counter market, and find an investor to buy from me. So closed-end shares trade in the secondary market. What type of securities can a mutual fund company issue? A mutual fund company, an open-end company, may only issue common stock. A mutual fund company may not issue preferred stock. They may not issue any type of debt. They may not issue bonds. What type of securities can a closed-end company issue? Well, they can issue common stock. They can also issue preferred stock. They can also issue debt, such as bonds. Share price. Mutual fund share price is based on NAV, net asset value. So net asset value is calculated daily. Now, the price that an investor pays for the shares, while based on net asset value, the price that an investor pays is the public offering price. The public offering price is determined by a formula, which is NAV plus the sales charge is the public offering price. Closed-end share price is based on what? Supply and demand of outstanding shares. Now, when I buy closed-end shares, the price that I pay does not include a sales charge. Therefore, on top of the public offering price with closed-end shares, I must pay a commission. What rights do mutual fund shareholders have? They have the right to vote for the board of directors. They have the right to dividends declared by the board of directors. They do not, however, have preemptive rights. Preemptive rights would allow a shareholder to maintain proportional ownership in a company when new shares are offered. Well, there's no way for an investor to maintain proportional ownership in mutual fund shares because new shares are continuously being offered. So no preemptive rights with open-end shares. What rights do closed-end shareholders have? Voting rights, dividends when declared by the board of directors. They do have preemptive rights. Closed-end shareholders do have preemptive rights. So if the closed-end company were to sell some additional new shares after the initial public offering, then existing shareholders would be able to buy those shares, those additional new shares, proportional to the number of the initial public offering shares that were bought. Ex-dividend date for a mutual fund is set by the BOD, Board of Directors, and is typically one business day after the record date. For a closed-end company, the ex-dividend date would be set by the SRO, self-regulatory organization, and that would be FINRA, and is typically one business day before the record date. Now we're going to be focused on open-end companies only. So we're done with the FAC, we're done with the UIT, and we're done with the closed-end company. So we're going to be focusing on the open-end management company from now until we get done with investment companies. Open-end company price is based on net asset value. Said that a few moments ago. Net asset value is calculated at least once every business day. Net asset value is calculated at least once every business day. Now, at what time of the day would net asset value be calculated? That would be defined in the prospectus. That would be defined in the prospectus. Shares are purchased or redeemed at the next calculated NAV, known as forward pricing. So if I put an order in today before the market closes, and if share price is calculated at market close, when will I know the price that I had paid if purchasing or received if redeeming? Well, the order went in today before the market closes. Net asset value is calculated daily at market close, so I would know my price today at market close. That's the next time the net asset value is calculated. What if I put an order in today to buy or sell, redeem shares after the market closes? When will I know my price? Close a business next business day, because that's the next time the net asset value is calculated.